Hello, today I'll be doing slightly different. Instead of individual stocks, I'll be looking at the US market in general. So I'll be specifically looking at SPY, which is an index fund. So it tracks the S&P 500 index, which is the top 500 companies in the United States. So if you have been tracking the stock market recently and also following the news, you would have noticed that back in February, March, the stock market hit a peak of about 610 on the SPY. And since then, Trump announced his tariffs and there was a drop. And then when the actual implementation of the tariffs kick on, the market dropped further to about a low of about 500 on the SPY. So what is this tariff? So basically, Trump imposed tariffs on almost all countries, and countries which have a trade deficit with the US get more tariffs. So these are not like small tariffs, these are substantial tariffs, 10 to 50%. So these are huge tariffs. So as a result of that, the market dropped. And after that, Trump decided to pause the tariffs for 90 days. So the date when the tariff went live was in April, so April 9th, and that was also the pause where Trump decided to pause it a few days after, 90-day pause. And since then, the market has slowly picked up to now on June. The date I'm recording this video is June 25th, 25th of June, where the market is now about 608, so almost reaching its high again of 610. So I have concerns for this because firstly, the market again is reaching its all-time high, but the tariffs issue is not really resolved. So if you remember, the tariffs, Trump implemented a 90-day pause, and the 90-day pause is going to run out soon. In fact, it will run out in about 2 weeks' time on the 9th of July. So first, let us conclude a few things. The first thing is that people think the tariff is bad for the US economy, and so if the tariffs do happen, the stock market will drop. That's a guarantee. But why hasn't the market picked that up, or is the market already forgetting about the imminent Trump tariffs that are coming? So there are a few outcomes of what will happen in the next few weeks. Firstly, Trump cancels this tariff and says, nope, I'm going to cancel all tariffs. Second, he decides to delay the tariffs again or keep it at 10%. Thirdly, the tariffs go into effect and all the 30%, 20% tariffs on these different countries gets activated, because most countries currently hasn't made a deal with the US. I don't think, so the first reason, Trump cancelling the tariffs entirely, I don't think that will happen. Most likely he will either pause it or the tariffs comes into effect. Pause, there's a very good reason for why he might pause it again. The main reason is he wants to give countries more time to make trade deals with him. And the second reason, tariffs comes into effect, I think it's very plausible as well, because he wants to hurry the pace in which the countries are making the deals with the United States. So a lot of countries are in standby mode, just currently watching the current situation, not really going into a deal yet. So I got a feeling that there is a lot of downsides in the current market and not a lot of upsides. So there is a resistance at the market high at 610, and potential downsides could again go all the way down to 500 in the event of tariffs kicking on. So now that you know the downside, so what actions would I recommend you to take? So now we go on to the third part. I wouldn't recommend you selling all your index funds or all your stocks in the stock market. No, because there is a possibility that the market could again go up if Trump decides to pause his tariffs again. But to capitalize on this huge possible downside, I'll recommend two things. Either sell a bit of your index fund, so sell it. You want to have cash when the market drops. So because cash gives you an opportunity to buy when the market dips. Second, you could also buy a protective put. So these are options. So when you buy a put, it gives you the right to sell your shares at a particular price. But of course, to get that right, you would have to pay the premium. So I definitely recommend spending some money, a tiny bit of money, to buy protective puts. And if in the event that the market drops, you'd be able to gain a huge amount of money. Thank you.